Hey everyone, and welcome back to Investing Talk podcast. Today, we're going to be looking at Lumen Technologies, ticker symbol LUMN. And this is a company that's been making a lot of headlines lately in the investing world, and for good reason. Their stock price has more than doubled in 2024 alone, and that's been fueled by this really ambitious goal of becoming the backbone of the AI revolution. But there's a catch. Their earnings haven't exactly kept pace with that skyrocketing stock price. So is Lumen a hidden gem poised for this massive growth? Or are we looking at a potential overvalued stock just kind of riding the AI hype wave? We're going to find out.
Yeah, it's a fascinating situation, isn't it? You've got this really compelling story around AI and the need for robust data infrastructure.
Hmm.
And Lumen is right in the thick of it, securing these deals with giants like Microsoft and Corning to build out the network that connects data centers, the very foundation of AI applications.
Yeah, it's like they're laying down the digital superhighways for this AI age. But let's address the elephant in the room. Those negative earnings per share that we mentioned. Can you break that down for our listeners? Why should they even care about negative EPS?
Well, negative EPS essentially means the company is losing money. It's as simple as that. Now, for a company like Lumen that's investing heavily in future growth, it's not necessarily a death knell, but it does raise some serious questions about their ability to turn those investments into
So it's a
profits.
bit of a balancing act, right? Betting on the future while also trying to manage these current financial realities. Let's dig into Lumen's role as this so-called AI backbone a little bit.
Mhm.
What exactly does that even mean, and why is it so important?
Imagine the AI landscape as this vast, interconnected web of data centers. These data centers are the brains of the whole operation, where all the processing, the learning,
Yeah.
the creation of AI applications, all of that happens there. But for these data centers to communicate with each other effectively, they need lightning fast and reliable connections. And that's where Lumen comes in. They're laying the fiber optic cables, those high capacity pipelines that allow data to flow seamlessly between those centers. And as AI continues to explode, the demand for this type of infrastructure is only going to increase, and Lumen is betting big on being the go-to provider.
Okay, so they're providing the essential plumbing for this AI revolution.
Yeah.
Got it. But how does Lumen's technology actually work? What sets their fiber optic network apart from the competition?
Lumen's network is built for speed and reliability, which are two crucial factors for AI applications. Their fiber optic cables use light to transmit data, which is significantly faster than traditional copper wires. Plus, Lumen has this massive existing network infrastructure, spanning vast distances, which gives them a significant edge in connecting data centers across the country, and even globally.
So they're leveraging their existing assets and expertise to tap into this new market. That's smart. But let's get back to the financial side of things for a second. What's the overall sentiment among analysts about Lumen's prospects?
The analyst outlook is a mixed bag, to be honest. The consensus rating for Lumen is currently a hold, which essentially means analysts aren't recommending buying or selling this stock right now.
A hold rating. That sounds pretty neutral. So are analysts basically saying wait and see?
Yeah, there's a lot of uncertainty surrounding Lumen's future. The median price target for the stock is $2.41, which is significantly lower than its current trading price. This suggests that some analysts believe the stock may be overvalued based on Lumen's current financial performance.
So we've got this tension, right, between this excitement surrounding Lumen's potential in the AI market, and then this cautionary tale told by their earnings reports, and this kind of hesitant analyst outlook. So where do we go from here?
Well, that's the million-dollar question, isn't it? It all comes down to how much risk investors are willing to take on. If you believe in Lumen's long-term vision and their ability to execute on their strategy, then the current stock price might seem like a bargain. But if you're more risk-averse, it might be wise to just wait and see how things play out.
Okay, so we've laid the groundwork here. We've got this company with a compelling story, operating in a potentially explosive market, but facing some very real financial challenges. Now let's dive into the details a little bit. Let's start by taking a closer look at Lumen's most recent earnings report for Q4 2024, which was released on February 4th, 2025. What were some of the key takeaways from that report?
Well, there were some positive signs, actually. Lumen reported solid sales growth across their enterprise segments, which suggests that their strategy of focusing on business customers might be starting to pay off.
That's encouraging, right? Especially since their overall revenue has been declining in recent years.
Yeah. It is a positive sign. But it's important to remember that revenue growth alone doesn't tell the whole story. We also need to look at profitability, and that's where things get a bit more complicated.
Right back to those negative earnings per share. So what exactly is driving that? Is it solely due to these heavy investments they're making in their AI infrastructure?
It's certainly a major factor, but it's not the only one. Lumen also carries a significant amount of debt, which stems from past acquisitions and investments. This debt requires substantial interest payments each year, which eats into their profits.
So they're dealing with the cost of investing in the future and the burden of these past financial decisions. That sounds like a tough spot to be in.
It definitely presents challenges. However, to be fair to Lumen, they have been taking steps to address their debt. In their Q4 earnings report, they highlighted a strengthened balance sheet and an improved overall liquidity position.
So they're making progress on that front.
It seems so. They've been selling off non-core assets and using the proceeds to pay down debt. This is a positive sign, as it suggests they're committed to improving their financial health.
All right, so we've got these competing forces at play here. Lumen is making strategic investments that could position them for long-term success in the AI market. But they're also grappling with the financial realities of those investments and the weight of their existing debt. Before we move on, I want to hear from you, our listeners. What are your initial thoughts on Lumen Technologies so far? What stands out to you? What questions are swirling in your mind? This is where things get really interesting for me. We've talked about Lumen's financials, their bet on becoming this AI backbone, the risks and the potential rewards they face. But what about the bigger picture? How does Lumen fit into the broader landscape of this AI revolution?
That's an excellent question, and it's one that every investor considering Lumen should be asking themselves. Lumen is not the only company vying for a piece of the AI pie. There are numerous other players, both large and small, who are also investing heavily in AI infrastructure and services.
So Lumen is facing some stiff competition.
Indeed they are. Companies like Amazon, Google, and Microsoft all have their own cloud computing platforms and are building out their own AI capabilities.
So how does Lumen differentiate itself in this crowded market? What makes them stand out?
That's where their laser focus on the AI backbone comes into play. They're betting that their expertise in fiber optic networks and their ability to provide high-speed, low-latency connections between data centers will give them a competitive advantage.
So they're specializing in the infrastructure that underpins this entire AI ecosystem, rather than trying to build their own AI products or platform.
Exactly. They're playing to their existing strengths and aiming to become the essential partner for companies, developing and deploying AI applications.
That's a clever strategy. It allows them to tap into the AI market without necessarily having to compete head-to-head with these tech giants in areas like software and applications.
Precisely, and it aligns perfectly with their existing infrastructure and expertise in networking.
We'll continue our discussion on Lumen Technologies right after this. Don't forget to subscribe to Investing Talk podcast for more deep dives into the world of finance. Share this episode with your fellow investors and leave a comment with your thoughts on Lumen's future. We'll be back in a flash.
Welcome back to Investing Talk podcast. Before the break, we were discussing how Lumen Technologies is positioning itself as the AI backbone, leveraging its extensive fiber optic network to connect data centers and facilitate the rapid growth of AI applications.
Right, and we also talked about that inherent tension between this exciting vision for the future and Lumen's current financial realities, including those negative earnings per share.
Exactly. It's a classic case of weighing potential against performance, and that's what makes Lumen such a compelling case study for investors.
Absolutely. So let's dig a bit deeper into those Q4 2024 earnings. We touched on some of the highlights before the break, but I want to understand what those numbers really tell us about Lumen's progress and challenges.
Well, one of the most encouraging aspects of the Q4 report was the solid sales growth across Lumen's enterprise segments. This suggests that their strategic focus on business customers is starting to gain traction, which is crucial for their long-term success.
That makes sense, especially since the enterprise market is where the real demand for AI infrastructure is going to come from, right?
Precisely. And it's not just about the raw revenue numbers either. Lumen also reported improved customer satisfaction scores in Q4, which indicates they're delivering on their promises and building strong relationships with their clients.
So they're not just winning deals, they're keeping their customers happy. That's a good sign for any business.
Absolutely. Happy customers are loyal customers, and that translates into recurring revenue and long-term growth.
But let's not forget about the other side of the equation, those negative earnings per share. We talked about the heavy investments in AI infrastructure and the burden of their existing debt. But are there any other factors contributing to those negative earnings?
Yeah, there are a couple other things to consider. One is the ongoing decline in Lumen's legacy telecom business. As more and more communication moves online, those traditional voice and data services are becoming less profitable.
So they're essentially facing a shrinking market for their traditional services while simultaneously trying to build up this new AI-focused business.
Exactly. It's a challenging transition to manage, and it's putting pressure on their overall profitability.
It sounds like they're walking a tightrope, trying to invest in the future while managing the decline of their past.
That's a great way to put it. And it's a situation that many established companies are facing in today's rapidly changing technological landscape.
So how should investors interpret these mixed signals? We've got growth in some areas, decline in others, heavy investments, significant debt. It's a lot to unpack.
It certainly is, and there's no easy answer. Ultimately, it comes down to your individual investment philosophy and risk tolerance. If you're a long-term investor who believes in Lumen's vision and their ability to execute on their strategy, then the current challenges might not deter you.
So you're essentially betting on their ability to navigate this transition successfully and emerge as a leader in the AI infrastructure market.
Exactly. And the potential rewards could be significant if they pull it off.
But for investors who are more risk-averse or who prioritize short-term gains, Lumen might not be the right fit at this moment.
That's right. It's important to carefully weigh the potential upside against the risks involved and make sure your investment decisions align with your overall financial goals.
Okay, so we've talked about Lumen's Q4 earnings, their strategy, their challenges, and their competition. Now let's shift gears a bit and talk about valuation. Despite the recent surge in their stock price, Lumen is still trading at a relatively low price-to-earnings ratio compared to other tech companies.
That's true. And it's something that many investors find intriguing. On the surface, a low PE ratio can suggest that a stock is undervalued, meaning it has the potential to appreciate significantly in value.
So it could be a bargain for investors who are willing to take on a bit more risk.
Potentially. However, it's important to remember that PE ratios are just one piece of the puzzle, and they don't always tell the whole story.
What else should investors consider when evaluating Lumen's valuation?
Well, one important factor is growth potential. A company with a high growth potential might justify a higher PE ratio, even if its current earnings are low.
So in Lumen's case, investors are essentially betting on their ability to grow their earnings significantly in the future as the AI market expands.
Exactly. And if that growth materializes, then the current PE ratio might seem like a steal in hindsight.
But there's always the risk
No.
that growth doesn't materialize as quickly or as strongly as expected.
Of course. That's why it's crucial to conduct thorough research and due diligence before making any investment decisions. Don't rely solely on PE ratios, or any single metric for that matter.
That's excellent advice. So to sum up, Lumen's valuation is attractive on the surface, but investors need to carefully consider their growth potential and the inherent risks involved. Before jumping in,
Precisely. It's all about finding the right balance between risk and reward. And that balance will vary, depending on your individual investment goals and risk tolerance.
okay, we've covered a lot of ground in this episode. We've explored Lumen's financials, their strategic investments in AI, the risks and potential rewards they face, their competitive landscape, and their valuation. Before we wrap up, I want to turn things over to you, our listeners. What are your thoughts on Lumen Technologies? Do you believe in their long-term vision? Are you convinced they can overcome their financial challenges and emerge as a leader in the AI infrastructure market? We'd love to hear your perspectives. Leave us a comment and let us know what you think. We'll be back in a moment to offer our final thoughts on Lumen Technologies. But first, a quick reminder to subscribe to Investing Talk podcast for more insightful discussions about the world of finance and investing. And don't forget to share this episode with your fellow investors. We'll be back in a flash. Welcome back to Investing Talk podcast. We spent this episode dissecting Lumen Technologies, ticker symbol LUMN, a company that's both fascinating and frustrating. In equal measure,
Yeah, they're making this bold bet on the future of AI, but facing some real hurdles in the present.
exactly. It's like they're building a bridge to a world powered by artificial intelligence. But that bridge is still under construction. And, there's some pretty big gaps to fill.
The very apt analogy, I'd say.
So as we wrap up our discussion on Lumen Technologies, let's try to distill everything we've learned into some key takeaways for our listeners.
Excellent.
What's the first thing investors should keep in mind?
First and foremost, Lumen is operating in a very dynamic and rapidly evolving market. The AI revolution is still in its early stages, and it's impossible to predict with certainty which companies will emerge as long-term winners.
So even though Lumen is positioning itself well, there's no guarantee of success.
That's right. Investing in Lumen is a bet on their ability to execute their vision and navigate the uncertainties of a burgeoning market.
What about their financial performance? What should investors be watching for in the coming quarters?
The key question is whether Lumen can translate their investments in AI infrastructure into tangible financial results. Will we see sustained revenue growth? Will they be able to achieve profitability? These are the metrics that will ultimately determine their success.
And of course, let's not forget about their debt situation.
Absolutely. They've made some progress in reducing their debt burden, but it remains a significant factor to watch. Investors should look for signs that Lumen is continuing to prioritize debt reduction while simultaneously investing in growth initiatives.
It's a delicate balance to strike.
Indeed, it requires a disciplined and strategic approach to capital allocation.
We also talked about Lumen's valuation, which seems attractive on the surface. That comes with its own set of caveats.
Yes, their low price-to-earnings ratio might be tempting for some investors, but it's crucial to remember that valuation is only one piece of the puzzle. Investors need to weigh Lumen's potential for growth against the inherent risks involved and make sure their investment decisions align with their overall financial goals and risk tolerance.
So to sum it all up, Lumen Technologies presents this compelling but complex investment opportunity. They're riding the wave of a potentially transformative technological trend, but they also face real financial challenges and fierce competition.
It's a story that will continue to unfold in the coming months and years, and it will be fascinating to see whether Lumen can deliver on its promise of becoming the backbone of the AI revolution.
Absolutely. And that's a wrap on our discussion of Lumen Technologies, ticker symbol LUMN. We hope this episode has provided you with some valuable insights to inform your investment decisions. As always, we encourage you to do your own research, consult with a financial professional, and make investment choices that align with your individual circumstances and goals. Thanks for tuning in to Investing Talk Podcast. Don't forget to subscribe, share this episode with your fellow investors, and leave a comment with your thoughts on Luna's future. We appreciate your support. And we'll be back soon with another insightful look at the world of finance and investing.